Good afternoon, everyone, and welcome to the first Refire and Target Communications Investing in Germany online roundtable of 2021. My name is Andrew Barber, and I am Managing Director of Target Communications in London. Once again, as I don't speak any German, I must apologise in advance for any poor pronunciation. The focus of today's discussion is the German retail market, and we will be asking who will be the winners and who will be the losers in a changing market. Does the traditional retail destination have a place in a post-pandemic world? What does the future look like for our city centres and our out-of-town shopping destinations? In 3 weeks' time, it will be a whole year since the World Health Organization declared that COVID-19 could be characterised as a pandemic. Since then, our world has been turned upside down with restrictions on travel, on social interaction, and how and where we work. Every sector of the real estate market has been impacted by these restrictions, with retail being one of the hardest hit asset classes, with limitations on the ability of non-essential shops to operate while having to contend with the rapid growth in online shopping. The explosion in online retailing during the past 12 months is seen by many as a watershed moment for e-commerce. But what are the implications for traditional retailers and retailing? What does the future look like for our city centres and out-of-town shopping destinations? To answer these and other questions, we have assembled a panel of retail property experts who, over the next hour or so, will be providing you with their considered thoughts on the subject. Firstly, let me introduce Susanne Klaußner, Managing Partner of Deutsche Investment Retail GmbH. Susanne has over 35 years' experience of the real estate industry and is considered to be one of the leading experts for retail property. Prior to her current role, she worked at the GRR Group for 13 years. Our second panellist is Jörg Krechky, the Head of Retail Investment Services for Savills in Germany. Jörg was appointed as the head of the firm's German retail investment team in 2015, and he previously headed the shopping centre investment team at Jones Lang LaSalle. Next, let me introduce Briain Morris, Managing Director and Head of Investment Europe for Slate Asset Management. Briain oversees deal origination and the asset management functions for Slate Asset Management's European real estate portfolios. Next on our panel is Adam Pearce. Adam is co-founder and managing partner of Frankfurt-based Kintar Investments, which was established in 2010. Adam has extensive experience across investment management and retail property and started his career as an investment manager at Lloyds Banking Group in 2008. Our final panellist is Johnnie Wilkinson, who is CEO of Greenman. Since establishing Greenman in 2005 and with over 20 years' experience in real estate development and investment, Johnnie has gained a reputation for expertise in the selection, funding, purchase and management of German food and non-food retail warehousing. Our lead moderator today is Mr. Charles Kingston, CEO and publisher of Refire, the online publication for international investors, which is focused exclusively on reporting about the German real estate market in the English language, and which was first published in January 2006. Before we start the roundtable discussion, I would like to introduce a final guest, Professor Dr. Thomas Biella, Managing Director of Catella Property Valuation in Frankfurt, who has agreed to share with us the firm's latest research into the retail property market. We are privileged to have Professor Biella present this research today as it has not been published elsewhere, so this is a world exclusive for you. So, Professor Biella, I would like to hand over to you now, and if you could talk us through what's happening in the market.
Yeah, thank you, Andrew, for your warm welcome. And ladies and gentlemen, warm welcome also from my side. Don't get nervous, just 4 slides in total, and that's over. But I'm really happy to be invited today for that really important thing. And I think it's essential to start, first of all, with a picture of Frankfurt, because I'm really sitting in the city of Frankfurt in the office today. So thanks for that. Again, coming back to the office 1 time per week. But I think we all agree that the last 12 months in particular have virtually, let's say, a trail of blood in this segment when it comes to retail in total. This is, of course, first of all, a typical bashing retail in total. But if we dig a little bit deeper, we see a more differentiated picture. And I think Germany is not much different from the other European countries. Saying this, I'd like to show you now the Picture, wonderful. So we will launch it tomorrow, just a little bit advertised, but I think this is again gives you a thing when I say Germany is definitely no different compared to the rest of the European market, whether it's in the high street sector or in the shopping center segment, because lockdown happened all over these places, whether it's Oslo or whether it's Rome. So, but the expectations for future are of course very, very different, and I think this is also one thing we have to discuss on that. Just 2 slides. I think the first one, the map shows you interesting things, and wherever you go within the 33 locations and countries, Germany's rents pointing downwards, the yields pointing upwards. So we are totally in the same evolution stages like the rest of Europe on one hand, because we are very, very synchronized. This is, of course, first of all, scratching the surface if you come to the retail sector in total. But on the other hand, of course, when you have a look more on the size ratios, for example, in terms of transaction volumes, of course, there you see definitely a different picture. Germany is and was the last 3 years the top destination for retail investments in both the last 2 years, definitely. You can see it here in column 2 and column 3, and I don't want to bore you with these number crunching things, but you see, of course, it's declining by 90%. But the whole range, it's quite interesting. When I say Europe is synchronized, it's not really true. Focusing on this indicator, on the leading position, it's Austria and Switzerland, of course, not really compared by size to Germany. On the other hand, at the bottom end, it's Italy with minus 28, which means 4/5 transaction drop, or call it massacre on that. That transaction volume, and this is again when it comes to the 3 large countries, and now we make a more reasonable comparison between UK, Germany, and France, so the big ones, the big elephants. UK still achieved a narrow plus of around 4%, followed by Germany with minus 20%, so 1/5 decline, and then France 1/3, exactly a 32% drop in that. This is more tactical thing. Of course, there were some pretty negative or positive headlines the last weeks or so, but I think from an analytical standpoint, and this is again where I think it's worth to have a discussion later on, it's column 5. You see the change compared 2020 to 2015. And this is a clear picture that the peak for the investment activity in retail in Europe, also in Germany, was in the year 2015. The investors' interest in retail appears to be declining starting in 2015. This is really a strong statement because the interest and the hunger for that, and you can see it in the last column, percent of retail volume among all property types, it's just now 40%. You don't see the 25% 2 years ago. Now we see it just 40%. It's the same evolution. So again, don't want to do this number crunching thing. Of course, Austria, Switzerland, more that. But on the other hand, you see Italy, Poland, just 7%. So investors, I wouldn't say they show a general goodbye to retail, but of course, it's definitely under pressure. At this point, and I know this is also one thing which we definitely will have in the discussion for some positive signals. At this point, I would like to make maybe a hush remark that will certainly be of interest. Anyone who believes that the currently highly valued food and beverage sector is also powerful anchored in the shops should definitely not underestimate what happened the last 12 months. So I'm coming more a little bit pessimistic, of course, from the general agenda. I think we shouldn't underestimate the high consumption coming generation, probably my daughters, but me too, definitely, and the experience of the lockdown. So the going among the people, which we all love in Q2, in May, April, June, definitely what happened, in my belief. This is definitely to be expected after the pandemic, of course, positive, has been mastered, only acts in a short-term rebellion, in my understanding. This is just a big breath, and then it will decline again in a world which is defined by permanent sales. This is one of my negative statements I want to give you definitely for the discussion going on. This is where I see really a huge restructuring phenomenon coming to the whole retail market. Positively speaking, right now, we don't follow the www.deadmall.com webpage like we see it in US. It's not existing in Europe, and I hope we don't see this anyway. But I think finally some words on the retail sector, so shopping center sector. We do not expect a rent increase in the shopping center segment in any of the 19 countries we follow. There was definitely no double-digit something on the whole thing. Compared to other European countries, the shopping center area in Germany per habitant as an indicator is really, really good, as you can see here. And honestly speaking, the last shopping center we saw, the last development was in Singen am Hohen Twiel. Probably some of our friends from abroad never heard this location. Simple thing, it's close to the Swiss border. And this was, I don't want to quote the developer, by the way, but this was the secret reason why they bring it to an end. Right now, there are no construction on the way. There are some things in Hamburg and the new harbor city going on, definitely. But this was the big last thing we saw. And of course, now we see the big status quo situation. And this is, again, of course, where, to be properly end with my statement, I think the age of shopping centers and their growth prospects is coming to an end in this decade. Saying negative, it's not my natural thing to end up negative, but I think I want to give you some rush statement. You can punish me now on going on discussion. Thanks for listening, and then back to you, Andrew.
Thank you very much, Thomas. I'm glad to hear that you also have a daughter who is a high consumption money spender. Your insights into the market are very much appreciated. Now, without any further delay, I'm going to hand over to Charles Kingston, who's going to lead today's roundtable discussion. Charles, over to you.
Good afternoon, everybody, and you're very welcome to this afternoon's presentation. Now, that's a very interesting start off by Professor Dr. Bialet, because he's not trying to set the tone for what is obviously, going to be a hugely positive bouncing discussion. But we're very fortunate in having 5 excellent panelists here, some of who go back in this business a long way and have seen crises, perhaps not the same one as we're currently seeing now, but they've seen the ups and downs before. And we can tap into that experience. As Andrew said, please take the opportunity while we're here to ask your questions. They will show up on the screen for Andrew, and we'll be able to deal with questions later on. Without further ado, just very briefly to myself, I'm Charles Kingston. I published the Refire Intelligence Report. We've been reporting on the German market for the last 15 years. Of course, a big part of this has also been the retail industry. And we've followed it up very closely over the years, along with other asset categories. I would therefore like just to start today by perhaps asking all 5 of our panelists to briefly, I know Andrew briefly told us what they did, but if they could introduce themselves again to our audience and say what their specific goals are in the German market, what they're trying to achieve, and what their major goals are at the moment. Jörg, Krechky, could we start with you, please?
Yes, of course. I would really like to contradict to Thomas as usual and punish him, but there are some decent information coming from Thomas which I can't deny. So basically, my role at Savills is I'm head of the retail investment services in Germany. I'm chairman of the Retail Investment Board, the European Retail Investment Board, and I'm part of a further group, which is the Retail Repurposing Group at Savills, which is a group which is with specialists who are working all across Europe in order to deliver services to our clients with the idea of repurposing retail assets. And this is my goal, transporting our services into the markets and to our clients. So therefore, I'm currently on a video roadshow since January to our clients to get this group known and in contact.
Well, I certainly hope we don't see too many shopping centers turn into what your background is like there, Jörg. I know that this has definitely been the case in the United States, but hopefully we're not faced with that yet in Germany. Susanne Klaußner, you've been in this business a long time. You know a great deal about shopping centers, what makes them work, where they have problems. Can you tell us now, with your business, what you're trying to achieve in Germany?
Well, I'm now managing partner of DIR, Deutsche Investment Retail, a company that was founded to bring in the retail experts of the Deutsche Investment Group. We started with a 300 billion volume German regulated specialized fund, and as I do for a long time, we're focusing on food-anchored retail, because we still think this is a very stable, or it's the stable asset class in retail, or the stable sector in retail. And I think that we will see a lot of changes in high street and shopping centers. We will see a lot of changes also in the in all what we now call the daily needs supply. The shops will change, but the shops here will stay. That's the main message, I would say. And otherwise, I don't think that the food retailers will now come into the city and fill all the spaces which actually are vacant or where there is demand. I think that that we will see a different city in the future, and retail will for sure be a part, but not the only use. And I think we will see different mixtures in shopping centers, and maybe the mid-sized shopping centers will have problems in the future in Germany. Well, the daily needs supply for us is necessary. That's what we've seen during the last months. And with our polycentric structure in Germany, we need them everywhere. And that gives us a lot of opportunities, still a lot of opportunities to invest.
Okay, good. Well, your focus then on essentials. Briain, you too, your business is essentially about this as well, wrapping up what are key items of consumption for people. Can you tell us about Slate's strategy in investing in Germany?
Yeah, sure. Thanks, Charles. So Slate, one of Slate's strategies is focused, as you rightly mentioned, on essential retail. So we have over $2 billion worth of essential retail in our overall platform. We did our first deal in Germany in the back end of 2016, and we've executed on 19 portfolio transactions since then and accumulated just under 260 properties, which for the most part are standalone grocery stores. So that equates to about just over 5 million square feet, with a focus on, obviously food and around pharmacy, DIY, medical facilities, that type of assets. So very, very resilient, performs well in good times as well as bad. And in terms of my immediate goal is to support our team in Frankfurt and deploy. We raised 250 million euros of equity in the middle of COVID. So my immediate goal is to deploy that equity and continue to acquire similar type assets across Germany.
Great. Adam Pearce from Kintar. Adam, tell us a little bit about both the various aspects of this business that you're involved in, because you're not just an investor in retail outlets. You're also a co-investor. You also work as a property manager. Tell us about Kintar's approach to the market in Germany.
Yeah, thanks, Charles. Well, first and foremost, Kintyre is a full-service real estate platform, so it differs slightly from the other panelists today. We do, as Charles mentioned, support our management approach with a co-investment and capital. We have a broad retail exposure, so we have managed and owned supermarkets, high street, shopping centres, more recently factory outlet centres. We're quite long on factory outlet centres, and moving into urban redevelopments that have had a retail angle that need to be repurposed. So much like Jörg and the guys at Savills at the start of this year, we have launched a repurposing division. We call it an asset feasibility team because it doesn't necessarily need to be retail in the end, but most of the assets that we are seeing coming to the market are retail in their history, may not be in the future. Also, to support that, we've tripled the size of our project and construction team over the last 2 years, because at the end of the day, there's going to need to be major CapEx put through these assets. And as an asset manager and a property manager and a full service platform, construction and project management is going to be one of the key drivers of value for these projects. It might sound like a bold ambition. What is our goal? Our goal is to be Germany's best full service real estate manager.
Terrific. Johnnie Wilkinson. Johnnie, you've been leading Greenman for quite a while now, and in fact, you're among the pioneers in investing in the whole area of Fachmarktzentren, grocery-anchored retail. So every move that you make is watched carefully by others in the industry. Tell us about, after 10, 15 years of being in this business, what you're still trying to do, what you're trying to achieve with Greenman in the German market.
Hi, Charles. Thank you very much. I think you're giving us a little bit more credit than we deserve, I have to say. But in total, we have just under about 900 million of assets in Germany, all through the one structured agreement open, which is a quasi-open-ended fund. We collect investors investing through their pensions. So average investments are very small, some 50 to 80,000 investments. So we have 7,000 plus investors. And for us, the focus is we are buy and hold strategy. And what we try to do is find locations that will be sustainable for the long term and make sure that our properties remain relevant for the long term. And I think at the moment, there's a rapid change in retail. Our focus is how do we ensure that the properties continue to be relevant, not just for the retailer, but also blurring the lines between what is happening now between the retailers and the consumers. Our sort of main goal for this year, apart from AUM targets, is to kick off our process on 5 by 25. And this is a commitment we've made to generate 5% of our revenue in funds from non-retail, non-rental income activity. So generating revenue outside of rental income for the fund via the properties, whether that be various different things, which we can probably discuss a little bit later if you get a chance, Charles.
I mean, you do talk about one thing there, Johnnie, which I think is very key to this afternoon's discussion, and that is, although the title of our presentation is Winners and Losers in a Changing Market, I think in some ways we can explore who the winners and who the losers might be or already are. But I'd also very much like if we can tease out, for example, what changes you are all seeing in this market. So if there are real changes in the German market, briefly, Johnnie, what would you see as some of the key changes, let's say in your particular segment of the retail industry?
I mean, obviously, Charles, I think what we've seen from COVID a little bit, and it's happened more in France and in the UK, and it's now starting to happen in Germany, is the retailers opening their eyes to click and collect, or as opposed to virtual retail. Quite a stunning data that we had from the UK in 2020, in May 2020, was that Tesco increased their online sales by twice the size of Ocado in 6 weeks. And they did that by two areas. One, obviously, massively increasing manpower, which they can do, but also by distributing the food via their existing store network. So we think that the retailers are starting to open to that. We see Aldi, Sud in Germany, but also around the world. What they are currently doing is investing a significant amount of money, I don't know the exact figures, but I know it's in the hundreds of millions, on standardizing their computer systems and their back-end computer systems across all of their countries to try and understand where the full inventory in real time. And for me, that only speaks to one thing, to Aldi and perhaps others opening up more to e-commerce and to hopefully distribution from our perspective via their store network. And I think what we're going to see is, we've seen it in the fashion retail market first, of course, but I think what we're really going to see is in the next 18 to 24 months, the food retailers ramping up in Germany, their output through click and collect. Whether that materializes, I don't know, but I think that's what we potentially could see.
Well,
Charles, sorry, could I just butt in? We've had a very quick question as for Johnnie. Before we forget, could you repeat the Ocado and Tesco online statistics, please?
So in 6 weeks during the lockdown, Tesco's online retails grew by twice the amount of Ocado's total online retail.
That's amazing. Thank you.
So what this is telling us, we all have you all have expertise in these different segments. I'd like to, just as Johnnie has done, I'd like to, without getting too into the nitty-gritties yet of the individual segments, what are the changes do you see across the whole of the retail industry? Of course, we're all aware of the rise of online commerce. But what strikes you first of all, individually? What strikes you first of all as being, fundamental changes which in 5-7 years from now will lead us to have a completely different retail landscape than we have now? What are those changes? What are the forces of those changes, apart from just the rise of the internet, the rise of e-commerce? Susanne?
Well, I think that the distribution ways will change, and the kind of shops. I could imagine that more and more shops will offer products of different producers which fit together, so that there is more shopping event than pure shopping in a certain label store. And this mixture of some labels, for example, gives us the more variety or bigger variety in the shops, and maybe more differentiation by changing the assortment more quickly and reacting more on the demand of the people. I think in the past the retailers didn't react on the true demand of the customers, and that's what we now have is more or less the reaction of that. Regarding, the daily needs or the essential retail, I think we will have digitalization in the store. We will have more distribution ways, but I'm convinced, especially in Germany, with a polycentric structure, the store will stay.
All right, Susanne, we'll get on to that. We'll get on to that later, because I think you all have your own views on the individual changes within, for example, the supermarkets or the Fachmarkt center. And what I'm trying to get at the moment is, what other fundamental changes are happening. You hear from classic retail that this is a business that is utterly shifting. Jörg, you know across several categories of retail, what the history has been and what fundamentally is changing now. What are you seeing?
The biggest changes we are seeing is that there is no blueprint at all. In the past, everyone who was working with retail had a blueprint and has done the development sometimes before that, and has just copied and pasted their assets and their.
So you're agreeing with.
That's over.
You're agreeing with Susanne that retailers were not necessarily paying close attention to the market beforehand.
No, I'm talking about real estate. The piece of real estate for the retail operations was in very very high amount of locations just the blueprint of what has been built sometimes before that, and this is the significant change. There is no blueprint at all. It's at the moment it's all about ideas, and I would like to give you an example. We've been working on a shopping center, which was a shopping center which nobody needed in a small town in Bavaria. And we thought, okay, we are so good, we could deliver some ideas for a refurbishment. And we worked on this shopping center has roughly 15,000 square meters. We worked on several retail concepts. And every time when we finalized the concept, we sat together and said, no, that's not the solution. Finally, the final solution was, and it's going on right now in the market, it's a development at the moment, was that we deleted most of the retail space. We left approximately 5,000 square meters retail. And on top of the entire building, there will now be a university and a tower with student housing, and we will have some synergetic retail for this kind of customer. It's all at the moment. It's all about ideas, and it's another major point. It's matching different sectors with each other, tailored to a particular location.
Okay, Briain, Slate is a relative newcomer to this market. I know you've got a decent fund and you've got a fair amount of firepower. In the period of time that you have been active in this market, what are you seeing that is already giving you cause to think, are we doing the right thing? Are we investing in the right area, or are we too finance orientated here?
Yeah, so just on that, so we're a fundamental real estate investor, Charles, how I would describe it. What we buy really is critical infrastructure from a real estate perspective for the delivery of everyday goods. So we are fully focused on essential tenants, as I mentioned earlier.
Yeah.
So that's really, location is key in that. So I think about even how Germany is populated. We focus on, locations that are very close to rooftops and chimney pots, because I think one of the things that gets overlooked is the cost involved in whether it's online or otherwise, but moving goods in that last leg of the supply chain is extremely expensive from a transportation and a labor perspective, and sometimes I think that gets overlooked in the discussion. But what we buy is supermarkets. We ultimately, the physical space is really it's a warehouse with 20-foot clear ceiling heights and loading docks that are located close to where end users need them to be, right?
Right.
So if in answer to your question, not a lot has changed. We've done a lot of leasing during COVID. Our rent collections are 98, 99%. We are, because of their essential nature, they've all of our tenants have stayed open, paid rent. And it's that resiliency really that brought us to the asset class 10, 15 years ago, in North America. And we've seen its resilience through the GFC and coming to a powerhouse like Germany. It's performed exactly how we expected to perform. We never predicted this pandemic was going to happen, but in terms of the performance of the portfolio, we've been very, very pleased because it's just extremely resilient from a cash flow perspective.
So you take a fairly hands-off approach to the actual operational side of the business. In other words, what you're buying is steady cash flow, 10, 15-year, good covenants, good leases.
So no, we take on extremely proactive, hands-on management style. We have a great team in Germany, very, very hands-on asset managers. What we have is extremely high-quality tenants with exceptional credit ratings, but we create that type of long income stream, Charles, rather than buy it. So we tend to focus on portfolios of short lease termed assets. And we've built great relationships with the tenants. And we tend to go in and, for modest CapEx, we'll do an extension or a refurb on those stores in exchange for, an extension of lease term or a new lease term.
And how low would you go on a lease term?
Well, you can try me.
2 years?
Sure. Yeah, no problem. It just speaks to it's relationship driven. It speaks to the quality of our team and the relationships that they've built with the grocers. But I mean, we understand food real estate pretty well, I would say. Yeah. And we it's not a science, but we look for things like the GROC and the effort ratio, and ultimately we go back to fundamentals to see is the tenant making money in this location off that rent, and to the extent that he or she is, how can we help them stay in that location? Because a lot of it, the grocery space in Germany, particularly in the discount format scene, is extremely competitive, and it's all about market share. So we look, I would say we're at the value add end of the spectrum in terms of creating those long-term resilient cash flow streams, and we've done extremely well in that regard.
Well, then don't be afraid to butt in later on when we're talking about how the operational side of this business may be changing, or what is going to have to change, so that investors like yourself and Greenman and others are looking after their investments further out. Gary or Adam from Kintyre, Adam Pearce. Adam, you've seen a couple of cycles of these things, including after the last financial crisis, where a lot of people were invested heavily in the market, and you guys were able to come in and help them with refurbishment, help them reposition. What are you bracing yourself for here now, apart from just buying, as do the others, buying good value Fachmarktzentren and supermarkets? What else is Kintyre bracing itself for here?
Yeah, thanks, Charles. I mean, to be honest, we're not bracing ourselves for anything because anyone that is sitting flat-footed at the moment, not having seen what was coming 18 months ago, has already missed the boat. Yeah. So when we're looking at the decline of certain retailers in certain sectors of retail, yeah.
Like what specifically? Most specifically?
Well, we are, I think at the moment, depending on the day of the week, it is Germany's 5th largest shopping centre manager. Yeah. But there's a reason that we're not long on equity in shopping centres. We are managing for owners that choose to be an owner. That's fine. But we sold all but one of our equity participations more than 2 years ago. Yeah. And that's because it was very clear that model was moving away. So, yeah, what have we braced for? As I mentioned earlier, we see there being a need, and whether it's 25% of shopping centres or a number around that, for a repurposing of what was a full-purpose shopping centre in the past. Going forward, either those 25% will not be there or they need to be something else. So we are looking at the opportunities to say, look, is it good real estate, first of all? Is it well located? Does it have footfall? Sometimes the answer is no. If the answer is yes, but it's just got the wrong, it needs a rework, yeah? What we call an urban regeneration, yeah? That's a bit of a buzzword, but I think it does encapsulate what we want to do quite well. We have a commercial park that has big box retail on it, yeah? That's now going through a replanning exercise to add 2,000 residential units, yeah? That will also have gastronomy and leisure and other things like that. Not everyone can afford to put a CapEx plan through that allows that to happen. But in some instances, investors won't be able to afford not to. Yeah. I mean, I've lost count of how many times, and, hopefully there's not too many of my institutional investment partners on this call when I say this, but I've lost track of how many times I've heard when we've priced an asset that's for sale and given an offer, oh, they can't sell for that price because it's below book value. Okay. Well, rather than looking at what the historic backward-looking book value was, a lot of these investors should have been looking forward to what the future value will be, unless they're bold enough to do something with those assets. And so we are now looking at those situations where those assets have got away from larger institutional investors mainly. I think they're the ones that have been the slow-moving tanker, where now they are realising that if they don't do something, the asset is going to be substantially worse in a number of years. And we're looking at that in two ways. We're either sitting down with them and saying, if you don't want to take the loss, but you want to work through this asset and turn it into something new, we can do that for you as a service provider. If you want to sell, then we can look to underwrite it and bring in one of our private equity investors that we've done a number of these deals with. So we come at it from both ways. Yeah. We can work with the owners, with our internal leasing teams, project and construction, to plug the new department. We have a team that's been set up just to provide feasibility reports for owners that don't want to sell but realise they need to fix the asset. Yeah, but for those that do want to sell, we're also sitting there along with a lot of US and institutional international capital that are willing to take on some of these projects and repurpose them in urban regeneration schemes.
But a lot of these projects are downtown projects in inner city areas, which surely are from a capital value point of view, heading into trouble. I mean, there's no question about it, whether it's this year or next year or the year after. There has to be a major revamp of a lot of what was the traditional downtown shopping in hundreds of German cities. What's going to happen there? Who, for example, do you think, for example, that cities are slow to recognize this and or do they need at this stage to get much more political involvement into it to collectively repopulate, bring life back into the city centres? Because many of these shopping centres are actually in a death spiral. Would you agree?
Yeah. So my answer might surprise you, but I don't think the cities have been slow to react. I think the owners of these assets have been slow to react, and they still are. So to answer your question, when we look at an underperforming shopping centre, we now will never buy a shopping centre if it's going to be a shopping centre. Okay, we'll buy retail big box assets that can be retail to retail. But at the moment, we would never buy a shopping centre to fix it into a shopping centre. What we would buy is a shopping centre that we can repurpose and add office, residential, whatever is suitable. But then when we do our underwriting, we underwrite that site as a development. So we backwards solve for the purchase price. You know, we look at where we think we can get to, what the capex will be to spend, and then we come to an offer price. But the disconnect is that the owners in most cases are still valuing shopping centres off a shopping centre yield, not off a development site price. And to be honest, I can't blame them. Yeah, but some of these shopping centres cannot be valued off a shopping centre yield. Yeah. Now, to answer your point on the cities, when we come in with our plans, I've been amazed in the last 6 to 12 months actually how receptive cities have been. So I'd actually go the other way. I would say that for our urban schemes that we are currently putting through, the city is as aggressive and as keen to help us. And that is in a lot of cases changing historic planning to allow us to apply our urban schemes. So the cities, I think, are doing a really good job. Yeah, the owners, and we are still an owner of one shopping centre, but the owners are in a tough spot. Yeah, if they're still holding a distressed shopping centre now, they need to realise that there's going to need to be some bold decisions made.
I'd just like to highlight briefly when you're talking about the repurposing. I'd like to highlight something that I went back and checked on my own notes, but around the corner from our office in Berlin is the Forum Steglitz, which was one of the original shopping centers in Berlin, one of the very early ones in 1970. And Europa Capital bought it back in about 2010 and sold it in 2014 to Real ES, I think, from Munich. And I went back to read what they were saying about the future of retail and how gung-ho they were when they were buying this shopping center. Somewhat iconic and one of the best shopping streets of all of Berlin. And they were gung-ho about the future of the center. Of course, in the meantime, it's been, for the last 2 years, been completely repurposed so that there's only 2 floors instead of 5 floors of shopping. And the rest is being turned into offices, co-working centers, fitness centers, whatever. I'd like to, but it is another interesting question. While we're still on the subject of the downtown, the inner city areas, I know that a lot of the expertise here also relates to grocery stores on the edges of town, and we'll get onto that. But have other of you had experience in the area of quarter development where the key to your investing decision or the approach to your investing is very much a question of what the local government or the council will be doing in areas? Susanne, this must be something that you come up with quite frequently.
Well, I think that the quarter developments will increase in the future, and why? Because first of all, we need the space, and we need more mixed use, and we cannot focus on where we have retail properties at the moment. We cannot still focus for just retail in the future, and I think the mixture might make it. Co-working spaces. I mean, one trend, for example, at the moment, which comes up a little bit, and I'm looking forward to that, quite interested, is co-working spaces in more rural areas and smaller cities. Because the pandemic showed us that it is maybe not always an advantage to live in the city centers. So we want to come a bit more outside. And so we can combine things and go for quarters in the, I would say, in the outer circles of the main cities.
Which is very much the sweet spot for your investment, for Deutsche investment retail.
Absolutely, yeah. That's a focus of us. And we think that becomes more and more a trend to go a bit more outside and not to go to the cities as we had it for the last, I would say, 10, 15 years, when everybody was focusing on the main capitals, the big six, as we say in Germany.
Mm-hmm.
And I think also in the high street has the chance to become more and more a multi-use place and not just a powering shopping strip mall, open air strip mall. So there must be different uses and a better mixture and maybe more entertainment. So that brings people back to the inner city. But I don't think that people are attracted by 5 stores of sneakers in a row with the same outfit. I mean, that's not an attraction. And I think that's one of the main problems retailers caused by themselves because they were not creative enough. And the other thing is the service, which could be much better. And I think one advantage of the store is that you can, use the B2B business to increase the numbers, but you must make it.
Okay.
Charles, we've had a few questions in from the audience, so could I just sort of throw a couple out there? One of them is, how would you describe the outlook of certain sub-asset classes of retail? We've talked about the high street a bit, but also non-food anchored retail park, big box, DIY stores and that sort of thing. And also there's a question about whether restructuring programs should be backed by investors for underperforming retail assets, such as the first and second generation shopping malls. I wonder if anyone's got any views on either of those points.
I have to have some views on these points, but
go ahead, Jörg.
First of all, I'd like to comment on Adam. I couldn't agree more. The situation we're having in Germany at the moment is that investors are or landlords are kind of reluctant in order to do what they have to do or what they should have done in the past already. And I expect this will change significantly in the course of this year and next year, when yields will go up, and they currently see that the valuations will go down. With a situation Thomas already described by saying rents will come down and yields will go up. You asked for DIYs. This is one of the, I would say it was in the past years kind of underestimated asset class, because a DIY investment is nothing else than buying a bond of a big box operator with a significant and very good covenant. So we will see more DIY deals, and this is a sector where yields will go further down in the next few months. That's what we expect. And the other question was in terms of secondary and or shopping centers of the first and second generation, if there have been any activities in terms of repurposing.
Yeah, the question was, do you see any restructuring programs arising backed by investors for underperforming retail assets?
I would say it will come. It will come just because there's a significant amount of value add capital, not only coming from Kintyre but from other sources, which will be deployed in Germany in order to repurpose these kind of assets. And this is really a situation, and we haven't highlighted this enough at the moment. This is for the entire class in Germany, in all the cities. It's a unique opportunity to reshape the cities, to make them more lively, to reshape shopping centers into what they have to be, whatever it is. If it's a big quarter with resi or kindergarten and some leisure, or if it's a entertainment center in the outskirts with 100,000 square meters. And so this is an opportunity. And the point is that retailers, cities the landlords and the operators really have to work close together in order to achieve or in order to face this challenge which we're having at the moment. And the banks, of course, would be a big.
Briain or Johnnie like to come in on one of those on a couple of those questions, Andrew?
I might chime in briefly.
Briain, chime in.
Yeah, just as it pertains to shopping centres, the more we're having more and more conversations, throughout Europe, more so with banks than with equity, because particularly fashion-led schemes in the shopping centre node they meant to, particularly in the UK, they meant to CVAs we're seeing where just unaffordable rents, numbers way down, and they're just having to come out of schemes. I think we're seeing more local councils getting involved across Europe, particularly as those, particularly what I would call the strategic locations located next to transport, where councils are coming in and saying, yeah, we'd be interested in partnering with you guys if you're interested in taking out this, what is a shopping centre, but ultimately shouldn't be one. But I think it's, it depends on the tenant makeup. It depends on the location. Everything's location, obviously. And it depends on, the rents that are being charged in terms of their overall sustainability and viability. Yeah.
It's not as if in the downtown areas there will be a shortage of tenants. The question is, what sort of tenant mix do people want? And we're seeing, for example, a big surge in interest from the non-food retail sector. The Teddies, the Kicks, the Actions from Holland, and so on, which all bring a certain kind of shopping experience to the downtown area as well. I mean, is this something that Slate could imagine itself getting interested in, or are you going to stay with the box unit outside of town for the foreseeable future?
Yeah, I mean, it just comes down to metrics, right? It comes down to investment metrics. So typically, downtown areas, you're paying a lot capital value per square foot because there's, the alternative use is such that, from a maybe it can be reconverted or repurposed to a residential perspective. But you're limited to what you can do in terms of extend and create value in that regard, and that's not certainly something that we could look at, but it's not what our current strategy is about. Charles, I'll let Johnnie chime in.
Okay, good. Johnnie, I'd like to talk a little bit about, because this is something that's actually going to be facing all investors in retail real estate, is also the long-term value of what you're getting. And your approach may be, less opportunistic, but rather more stable, in the sense that your fund investors are looking for you. You're committed to paying out your fund investors a certain yield, and you've been able to achieve this yield. But that doesn't come automatically. I know that Greenman has also, from the beginning, made more efforts to try to understand the retail business, the operating side of the retail business, because I think this is something that's very important for, the relationships that you develop within the retail industry and how you can grow with them for the next 10, 15, 20 years.
Absolutely, Charles. On the first hand, I'd say that I'd agree with Briain. First of all, a good owner of our type of asset, so food retail asset must be, the first thing you must be is very close to the tenant, must understand what the tenant wants and understand how the tenant's business is evolving. But more so nowadays as well, on top of that, I think also it's that blurring of the lines between who is your customer. Us as landlords, the tenant obviously is our main customer, if you like, but that line is blurring between the tenant and the consumer and the landlord. And I think from our type of asset, this is going to be the developing trend and how one responds to that. I mean, I think the supply changes the whole supply chain is changing. We made a small investment this year with a drone delivery business that was doing a trial with Tesco in a small town in Ireland. They were doing 100 deliveries a day from Tesco drone deliveries. I'm not saying that that's the future, but what I'm saying is that when they can deliver, on demand in 3 minutes, small light packages, it really makes a difference to how we consume products and how we need to store them and how we need to collect them. So for us, our first bit is really to understand the consumer in the store at the moment. As everybody here who owns German real estate and who deals with the grocers knows that we get no information about turnover or any other information data from the retailers. One of the areas where we're trying to work on is to understand the customers' movements throughout the store, so that we can try and understand what's going on in the store and together work with the tenant to be able to improve the consumer experience and the customer experience. And an example of that is we're working with a specialist in Dublin to develop a new AI system for predicting movement of consumers through stores and getting that to learn better in store. And this connected together with the loyalty card data from the grocers collect, and that massive knowledge of loyalty card data really helps us be able to build a picture of what will happen in store and in the short term, if that is just helping us be more efficient in terms of use of electricity in certain parts of the store at certain times, or heating, etc., already that's on a good positions for us. So, in an era where data is super important, the starting point for us as landlords has to be able to get a grip of our data and start to control and understand the data and understand what's happening in our stores. And from then we can make bigger decisions. And I think I would say that one of the reasons perhaps why investors, in common to Jörg's point, why investors haven't or landlords or equity providers haven't made such big decisions yet is it's very difficult to underwrite a business plan at the moment. There aren't the data points to be able to check and to review and to understand, or not significant amounts of it. And so when we're looking into the future, it really is just looking into the future. There isn't enough data to say, and only a small number of the malls or the shopping centres out there can have 4 floors or 5 floors of resi and office on it. And there's a lot of them that won't work for. And so to a certain extent, I do understand why investors are sitting on their hands at the moment, because it's very difficult to plot a course in another direction, which takes a long time and a lot of equity.
Well, we do know that Germany has been slow to get off the ground in terms of home delivery compared to the Anglo-Saxon sphere. And Briain, you've probably, in America, North America, they've generally been a long way ahead, but the UK is considerably ahead as well. However, even in the last year, there have been quantum leaps forward even in Germany, in people's acceptance of the idea that they can call up and maybe have something delivered. Now, this is, while still behind other markets, Johnnie, this is going to have a fundamental influence even on your business. And even if it's difficult to get the data from your tenants themselves, you guys have to stay abreast of all of this, right?
Absolutely. So if you think about it, Charles, on the one hand, you have Edeka made an investment in Picnic, which is that Dutch virtual retailer. I think they're going to throw a bit more money at that as well. Who knows if that's just a punt? I don't know. Kaufland have really nailed their colours to the mask of them being the footfall anchor. That their stores deliver the footfall for other retail units, and this is true at the moment. I mentioned before about Aldi in terms of what I thought, what perhaps might be happening in Aldi in a click and collect basis, and we're also talking to a retailer together with Mana about doing a trial in Germany on drone delivery from a position in Germany. So I think if we look at the example in France, which is maybe a little bit more relevant than the UK.
Yeah.
Roughly about 7% of all of the groceries that are sold through in France are purchased by click and collect. That is where the person goes online, selects the store and the store at the time which they want to collect their goods, and they arrive and pick up the products. And what has happened through that click and collect is the retailer gets a good proposition, because they use staff in the store to pack the goods. The retailer or the grocer, the consumer gets a good benefit, because he or she can be sure of the time of collection, of delivery, and the product mix that they're picking up. And secondly, and I think it happens in roughly 80% of the time, those people who visit, who come to click and collect, then go into the store to buy something because they've forgotten something, or their spouse has rung them on the way to say, don't forget to pick up that. And a trend we're seeing in France is that the heavy goods, like people picking up water or heavy products, they're choosing to buy those click and collect, collect them at the door, and then go and choose their fresh fruit or their fresh vegetables or their items from the butcher there. So I think this trend is going to happen in Germany more. I think it's going to roll out quicker, and I think with what we're talking about it, with that the distributed population in Germany, it makes it. In fact, it probably makes the ability for click and collect to happen at a quicker rate in Germany. A little bit more quicker, as it were. I would say though, Charles, sorry to.
No, please. It's a huge field, Johnny. I mean, we're all fascinated by it because it is a part of the change that is going on, as I see it too. Yeah, but go ahead.
And absolutely, and I think the point that has to be made is in terms of the grocers in Germany. You know, their margins are so much lower than grocers elsewhere, and therefore when they make a decision to make an investment or to go down a route, I think they have to really be sure of that. And I think what has happened, you know, to a certain extent this year, they've seen how essential they are. They've seen the essential services, but also they've seen what has happened elsewhere and how they can position themselves. And I really wouldn't be able to overemphasize what I said earlier about Aldi putting in place software infrastructure and as the first step towards big changes like that. And if you think about that store about Briain talking about the last mile delivery, I don't know what the line is, but there's something like you're never more than 2 kilometers away from an Aldi market. That it does seem to be very clear that perhaps this, as Briain says, the use of our type of an asset as some sort of a distribution / whatever channel does seem to be an area where we need to explore. And as landlords and owners, our responsibility is to make sure that we can facilitate that. If there needs to be physical infrastructure or technical infrastructure need to be inputted into a building for a tenant to be able to provide, to be able to change their offering or their methods of distribution.
Yeah. Adam, Kintar also is able to tap into a lot of experience, parallels perhaps that are taking place in other markets. And although the UK has been gallivanting along in this area, Johnny's point there about perhaps France being a more relevant comparison. What do you see in terms of all these key points? Artificial intelligence, the role that's going to play, data point gathering about the behavior of consumers down the line. To what extent is that fed into your investment decision-making processes?
There's a couple of points that come out of that from what Johnny has just mentioned and your question as well, and also one of the questions in the Q&A. One of the questions in the Q&A was about the vertical integration, and I put that a different way, and this will answer your question, Charles. I would say that we've spoken up until now primarily about the bricks and mortar itself. Yeah, not so much of what is going to be the change in the management or how we adapt as managers, and that can be the owner as well. What I'm trying to say is that there's going to be a greater risk sharing. If you take the factory outlet model, which for those that don't know is very much mid-term leases, but if a tenant is underperforming, they're reviewed on an annual basis. If they're not hitting turnover targets, then the owner can choose to remove them because their total income from that asset is obviously going down. And at the same time, the tenant can leave. Now, that risk-sharing model works with better data, meaning that you don't just trust the tenants, and look, we trust all of our tenants, but we need to have better technology, point of sales, yeah? So we're looking to roll out where we take a shared exposure to operating risk, live point of sale delivery technology. in simple terms, an electronic cashier where we collect the information centrally. So as a sale goes through, we're not waiting for monthly reports from the operators to say how much turnover they've made. Yeah, so that's going to be a fundamental shift. Now, this is probably in the non-food sector, but you can't share risk without technology. Yeah, so if you extend that factory outlet model to shopping centres, which that is where we believe, Kintyre believe it is going, where you're going to need to take an element of risk. You're going to need to have better data so that you can underwrite that risk. There's also another element to that, however, when we talk about the vertical integration. We as a manager, and not all managers will do this, and what I'm about to describe, an owner could do as well. We are looking at models where we can rely on the turnover data of the tenants, and I'm specifically referring to one of our developments where we're building one of Europe's largest market halls. We are considering as the manager to take the lease, so that the owner, Kintyre, a AA covenant company, will provide a corporate guarantee so that when that asset is sold, an institutional buyer does not have 40 turnover-linked tenancies. Yeah, so we'll take a blanket lease because we will then look to make a profit. Yeah, there's obviously needs to be an arbitrage in there where we will then have the responsibility and we will back our own ability to make sure that we can have the right tenants in there paying the right amount of turnover rent. Now, if you look at where an urban development can be priced, and look, I'll throw to Jörg in a minute, he may have a view on this, but we think if you've got a lot of residential and you've got good office and other things, you can get that down to 4%. If that was previously a shopping centre, that was trading at 8%. You've got 400 basis point arbitrage. There is room in the middle there for a management shift, for a restructuring of the way these assets are managed. For those managers that are bold, or even owners that are bold, there needs to be a sharing of the risk in that middle ground as we move to a more turnover-based lease structure. And that's only going to be supported by technology.
Okay, Susanne Klaußner. Susanne, I know from discussing this in the past with you as well, that when you were working with GRR, your company was well known for having a great deal of available information, whatever was possible about your tenants, and this was part of the success of GRR. And with your new fund at Deutsche Investment Retail, this must be very much to the forefront as to how you develop your relationships with your clients, with the retailers. Understanding, as Johnnie said, the key data points are to getting the best possible information as to how their business is developing so that you can work in tandem, in partnership with them.
Well, I think it's just communication with them so far until now. But I fully agree that in the future, it's really all about data, and we need to know more about the numbers in business. And we need to know more about the numbers regarding the footfall at the location. And I think that's still a way to go to convince the retailers to be a bit more open regarding their data. So the data we do have just come from our communication. But it's not a systematic sample. It's just to communicate, to talk about certain locations, and to take all the information and work with these informations. But that's not a systematic thing. It's more if you have the opportunity and if you're talking about a certain location, and then you get all the information or a lot of information you need. I would wish that we would come to a certain stage to be able to sample data, nationwide, Europe-wide, worldwide, and to get, much more clear and correct information we can work with.
Yeah.
But we you know, in the past we didn't have that systematic numbers, except the numbers everybody knows from Nielsen or GfK. But these classical retail data regarding the turnovers of the retailers, but we all know that these are not exact data per store.
Sure. Briain, you've got over 300 assets as far as I know to manage, and you've got your team in Frankfurt. Have you formalized this whole gathering of data information? To what extent do you take this as a key aspect of your investment strategy, knowing internally what's going on among your clients, Lidl, Aldi, and others?
Yeah, so I mean, you know, we have built. We were originally Blackstone's partners in Canada, and we've actually have our own proprietary system where we map and track data to do with different leases, different trades that happen, just to make ourselves smarter in the market, Charles. And that's not a German specific thing. That's a global.
Yeah. Do you find that German operators as accommodating, as communicative, as willing to share all their internal operating data with you as a landlord as in other markets?
I would put them on a par. I think the answer is more relative to how many assets that you own belonging to that particular, where that tenant is in situ.
Okay.
I think that's where the leverage comes into play, Charles. So I'll scratch my back type arrangement. You know, just going back to a point that Johnnie made, and I think it's important. The clicking, you know, if we think about, you know, the world, if I think about the average consumer, very cost conscious, particularly at the moment, very frugal, and then you think about, I suppose, the emergence of the discounter, where I think Germany is the perfect example. They're arguably, and by definition, their largest advantage is their cheap prices. And if you think about the distribution of food to end users, that online delivery piece. So a couple of things on the online delivery, because I just flicked through the Q&A there from some of the audience. Like the online delivery, I know the head of Tesco came out last year, I think in August, and said 90% of online orders that are being fulfilled from local stores, right? So again, it comes back to that locations piece, where I think it's more, you know, that's a click and collect piece, but like an online delivery is actually very, very expensive. It's a very expensive thing for the tenant to put in place, and ultimately the consumer must pay. And I think when you think about, particularly in the discount format supermarkets, I think if it ever happens in Germany in terms of online penetration, it'll be a click and collect type. You know, that's what we're going to see.
Or a drive-in or drive past or something like that.
Exactly. And I think that comes down to then, you know, how the physical formatting, the changes that takes place is, maybe if I've got 30,000 square feet as a discounter, I extend my store and have 20,000 square feet as a dark store, where they call it, where you can just click and collect from. But it's the same location is the point. And it's the fulfillment piece and delivery is, you know, if you're delivering from the store, is very, very expensive. And ultimately, that's the competitive edge that you lose as a discounter. It's just a point I wanted to make. And then the other piece, just in terms of, you know, physical supply chain infrastructure, it's really come back to, I think, particularly in Germany, it's the hub and spoke. That's how I think about it. Where it's the end of the spoke where the consumers live. That's where the assets need to be. So you have to be close in order to remain competitive. And that's key.
Yeah. I think one of the things we've learned from other markets is that no matter, even if the degree of servicing of click and collect or call up and home delivery is perhaps has more market penetration in other markets, I think everyone is finding it extraordinarily difficult, and even in the UK and in America, extraordinarily difficult to actually make money out of that operation, which is another aspect to the thing as well.
Yeah, well, it's expensive. And very few people, I don't think no one has solved it as yet. But I mean, it comes back to, like, particularly if your items are, you know, perishable. So whether it's food or medicine, it's very, very important that you're close to that end user. That's the other thing that hasn't been mentioned, right? The perishable nature of the goods.
Well, I mean, I do think we're at the beginning of a whole new data-driven local delivery world, where things will be achievable in a number of years, which are barely even possible now. Andrew, I'm conscious of the fact that there are questions from the audience. Perhaps we've got one or two there that might be of interest. We can't obviously cover in even greater depth, although it's a fascinating area, the whole business of how the operating side of retail will play a big role in all of this.
There's a question here which has caught my eye, but I would just say on that click and collect thing, something I've noticed in the UK is the use of sort of pop-up marquees in the car parks of the supermarkets. So the operators take your goods that you've ordered online, take them to a marquee, and you turn up. So you're not actually in the shop, you're outside. So sort of using that real estate imaginatively. The question that caught my eye is about future demand for retail space and where it's coming from. Which sector, if any, is still growing? Is it consumer electronics, fashion, department space, etc.? Which sector do you feel is going to be the most resilient and grow? And will it be multi-use schemes and repurposing, which is where the future is? Is there too much space and not enough demand? I don't know who'd like to pick that up. Adam has just unmuted himself, so I'm going to pick on Adam.
Maybe that was a mistake, because I think my answer is I don't think we know. I think,
and after that, I'd like to hear from Jörg Krechky on this, because this covers quite a number of asset classes.
Yeah. So the short answer is we don't know. Retail's going through a state of flux. We're making educated guesses when we plan for schemes. But when we are currently designing our urban schemes, what we're doing is we're designing them with flexibility in mind. Yeah. So that's not a fudge of an answer, but that is the best, and that's what developers and investors should be doing at the moment. We can't afford to sit back for 12 months or for 2 years until the market becomes clear. We need to move forward with our developments. But for example, we're building spaces where, we don't know what they'll be in 2 years' time, but we make sure we get the vertical transport right. We make sure they're designed in such a way that if the office demand in that particular area picks up or is sufficient, it will be office. However, if the office demand isn't there and we want to turn it into inner city logistics, we make sure that we haven't made poor planning decisions that stop us from doing that. Now, that has a slight cost for the owner, in that you might need to put extra loading capacity and things like that through the building. But at the end of the day, when you future-proof a building, a couple of 100,000 here will certainly, I think, is a good investment for the flexibility that you give for that building in 2 or 3 years down the line. So that was a very long way of saying we don't know what the right mix will be, but the way we're dealing with it is with smart and flexible design in our buildings.
Well, your Krechky, your mandate is specifically retail repurposing. So this one has got your name written all over it. What do you say?
I think for the time being, and at the moment, the perception of landlords and investors is that the food and the drugstore, the daily needs sector, is the most resilient. That's obvious, and everyone has already highlighted this. However, there is, as I see it, a certain resilience if we move from the city center where the location is giving some resilience, as it's right in the middle of a town. In the outskirts, the district mixed uses are some kind of future which we are seeing, where we have district shopping centers which will be converted with not what we've already mentioned, but for instance, with medical offices and a doctor's center with gastronomy and some leisure parts, and of course residential. This is I would really expect for the next few years flavor of the month for the investors, and because the investments are not as big as a big quarter in a city center. So it's better to manage for investors, and they could even better diversify their portfolio.
Yeah, Johnnie, I imagine you'll be staying fairly close to the Fachmarktzentrum, the grocery anchored retail, which has proven so good for you over the years here in Germany.
Absolutely, Charles. I mean, I have to say, the few times we've we've veered off that path. It hasn't been as successful for us as we would have liked. And we've built a team and a structure and processes, procedures, like Briain, has said, to focus to directly towards the retailers and the grocers. And I think, and I think hopefully that's going to pay. I mean, just a little bit of a plug, if you like. We about 0.5% of all of the groceries that are sold in Germany are sold through one of our stores at the moment, and so we like to think that we are hopefully be in a position to be a very tiny, small voice in the conversation of what's going to happen to the future of grocery retail and distribution, hopefully not only just in Germany and throughout Europe. And so the title of this webinar was, winners and losers. I'm not entirely sure we're in a position to say winners and losers. The race is not yet run, Charles, and in my eye at the moment. The first skirmishes of the battle have been taken, and we're still in there fighting, and hopefully will remain so for another few years.
Yeah, and I think it is one thing that's coming out of this whole conversation this afternoon as well, and talking with the individual experts here, is that to talk of the retail market is perhaps wide of the mark. I mean, I think there are many different retail markets, and each market is in itself, a special subcategory which increasingly has to be dealt with by people who are getting closer and closer and closer to the operating players within that. Adam, I know that with the differences of the markets that you operate in, this must become abundantly clear to you on a daily basis.
Yeah, no, I think that's right. I mean, when we first spoke, Charles, about this panel, I made it clear that it's a difficult question to answer, the winners and losers of retail. Retail is a multi-headed animal. Yeah. We're quite bullish in certain areas, and we're quite hesitant in others. I think if you're asking where would we go, the multi-use urban have an important element of retail supported by the living and working around that. We're very bullish on that. We're very optimistic, and the data seems to support it for factory outlet centres. I think I've mentioned that already. There seems to be a good crossover and acceptance, particularly in Germany, that although it is fashion retail, the turnover figures are going against the trend with regards to the shopping centres. So anyone out there that's listening that wants to go along with Kintyre on factory outlet centres, although we do already have a partner, we're quite good on looking at that. Commercial parks as well, where they are close to major highways with free parking, big box retail. We would certainly still be investing there. High street retail, it's difficult at the moment, and I think the difficultness comes around the solvency of the tenants that are there, and where the future ERVs are going to be for those assets. So, and that was my long-winded answer before. It's not that no, yeah. But
you made your point very clearly. I'd like to ask Susanne as well. Your investors who put in 100 million already into your new fund are also trusting your expertise in the area that you know a great deal about, which is the supermarket area, Fachmarktzentrum.
Well, I think this will be a stable investment. We need the locations, independent whether people buy with click on and collect or go into the store. We have a high density in Germany of these stores, and we are actually focusing on more than 80% of system relevant assortment, so to say. And we are quite comfortable with that at the moment. And I think the net of stores we do have in this segment for the daily needs, it doesn't make sense to build up delivery services, external delivery services. It just makes sense to deliver from these stores. And therefore, what we still need are the properties.
Yeah.
And that's why we are quite fine with this segment, and we will stay there and extend that engagement.
And in bidding for these properties, you'll bump into Johnnie again and Briain, presumably, all out there hunting for the best assets in Germany. Yeah, Andrew, are there other questions before we wrap up? I don't want to go too much over time here, but perhaps there's one final question that you might like to put to our 5 panelists.
There was a question which I can't find now, but it was talking about the growth of online shopping in the food sector in particular, and whether some of those changes which will be necessary are not yet reflected in yields. And I wondered if anyone's got an opinion on that.
If I jump in there, Charles.
Please do, Johnnie.
You've already highlighted 3 of us here are buying a lot of that asset class, and at the moment there's more demand for our type of asset type than there is supply in Germany, and so I guess that speaks to yields remaining low and while at the same time the banks are very, very willing to lend to us at super low interest rates for long periods of time. I think perhaps in the short term, it looks like yields are, regardless of, perhaps all of the discussions we had, it looks like the yields remain low in our asset type for the short term to medium term anyway, I guess. Yeah.
Briain, a few words on yields?
Yeah, no, we don't focus a lot on yield. We're more a capital value per square foot, when we acquire assets. But no, I tend to agree with Johnnie. There's a lot of demand. I think if anything, this pandemic has really just shone a light on, the essential nature of food, and I suppose the adjoining covenant strength of a lot of the occupants. The fact that banks like it, it's essential nature. It's become heavily bid. I know in the UK last year, there were more transaction volume in the grocery segment than there was in any other year. It's the highest volume in the last 10 years. And I don't think Germany's going to be any different this year. So it's really, food, real estate has really emerged as an asset class of its own now in Europe, which is good to see, but makes our jobs maybe a little bit harder for the short term.
Jörg, Krechky, yields.
They are very interesting points. I've got no positive messages for you guys on the investors' end. There is a certain demand which we have estimated for this year in the retail warehouse sector of approximately 6 billion euros, and we think the realistic transaction volume will be 3 billion euros, and that makes it clear that yields will go further down, and they will firstly bounce back. They will only bounce back when they have reached the level of logistics, which is around 3.5% at the moment.
Susanne, Klaußner, do you agree with Jörg?
I agree, yeah. And I think in our segment, we're on yields about 4.5% to 5%, 5.5% cash flow yield.
Good. And Adam?
Yeah, so I'm not placed as well as the other panelists to comment on the shopping centre, the supermarket yields, But look, the sector that we're in, being the urban regeneration and the urban precinct sector, the press has been quite well spread, and I think there's been a number of funds that have been raised specifically to invest into urban precincts, urban quartiers. It's becoming its own recognised subsector of retail. It hasn't quite become that for the larger pension funds, Allianz and Decker, but it will. So we are very bullish. It's our house view that we'll continue to see within the urban regeneration and urban quartier space a significant inward yield shift as that becomes a recognised subsector of retail.
Terrific. Well, look, with an eye on the time, I'm going to hand you back to Andrew. But I'd like to say thank you to all 5 of you, in fact, all 6 of you, if Professor Dr. Biala is there also. Very stimulating discussion. I'd love to have you back, or a number of you back, because I think this is going to be an ongoing discussion, and we'll be looking at this over the coming years. And it would be great to have such insights as we've had today from people coming from different backgrounds. Thank you all very much personally from myself. I'll give back to you, Andrew, and you may have 1 or 2 last things to say.
Yeah, well, thank you, Charles. And I'd also like to extend my thanks to Susanne, Jörg, Briain, Adam and Johnnie, and to Thomas Biala for helping us with that opening. And of course to you, Charles, and thank you for moderating today's session on the Targa Communications website. You'll also find details of our next Investing in Germany roundtable, which is going to be focused on the residential property market, and that's on the 17th of March, St. Patrick's Day for any Irish people in the house. That's all from us now. Please stay safe. Look forward to you joining us again soon, and good afternoon to you all.
Thank you.
Thanks, guys.
Thank you, everybody.
All the best. Thanks, Andrew. Thanks, Charles.
Thanks,
Jörg. Thanks, Susanne. Bye. Pleasure.